Well, Wall Street is on track for its fourth straight losing week. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all down sharply today as the escalating war in Ukraine overshadows a strong jobs report. We'll talk about that in a bit, so hang tight. Energy prices, though, are skyrocketing after Russia attacked the largest nuclear power plant in Europe, which is located in southeast Ukraine. The U.S. Embassy in Kyiv has labeled that attack a war crime. Officials, though, say no increased radiation levels have been detected after a fire was extinguished at the plant. But the International Atomic Energy Agency says just one reactor is now working at only 60% its capacity. And oil prices are resuming their rally today after a slight breather on Thursday. West Texas Intermediate crude futures are currently trading around $112 per barrel. Brent crude prices, meantime, are above $114 per barrel. Russia's flagship Urals crude, meantime, though, is being offered at a $20 discount below Brent as suppliers scramble to get people to buy their oil. Major oil companies around the world are shunning Russian oil, imposing a de facto ban, even as global officials have so far refused to sanction Russian oil directly. And with that shift, demand continues to rise for WTI and Brent, pushing those prices higher. And JP Morgan Chase analysts expect this issue will only get worse, and they say Brent prices could surge as high as $185 per barrel by the end of this year. And as we've been covering throughout the week, it's not just oil prices that are being impacted by this conflict. Other commodities are still surging as well. For the fourth day in a row, wheat futures trading has been halted after prices hit limit up at $12.09 a bushel. Meantime, corn futures are up more than 2%, topping 763 cents per bushel. And although the focus is on Ukraine, earnings are still trickling in for Wall Street. Gap shares following the broader market lower today, despite a Q4 beat and strong profit guidance. Gap reporting a loss of 2 cents per share on $4.53 billion in revenue. That was better than analyst expectations on both the top and bottom line. Gap sales, though, were still down 3% compared to 2019. The company did forecast full year 2022 adjusted earnings between $1.85 and $2.05 per share. That topped analyst expectations for $1.86. Sweetgreen shares, though, meantime, are rallying more than 18% on stronger than expected Q4 sales. The salad chain reported a loss of $1.14 per share on $96.4 million in revenue. Now, that was an improvement from the losses seen in Q4 of 2020 and topped analyst revenue expectations. Sweetgreen forecast revenue between $100 and $102 million this quarter, and then full year revenue between $515 million and $535 million. Analysts were looking for 2022 guidance of just over $513 million. And finally, as I promised, the economic data of the day. The February jobs report absolutely smashed expectations. Labor Department reporting that the U.S. economy added 678,000 jobs last month, with the unemployment rate falling to 3.8%. Now, that crushed expectations for just 440,000 jobs to be added and an unemployment rate of 3.9%. The leisure and hospitality sector continued to lead those gains, adding 179,000 jobs last month. There were a total of 6.3 million unemployed Americans in February, still higher than the 5.7 million before the pandemic. The labor force participation rate is also still lagging behind pre-pandemic levels at 62.3% in February. In February of 2020, right before the pandemic, that number stood at 63.4%. And wage gains also stalled last month as employers struggle to keep up with inflation. Average hourly earnings rose just 1 penny between January and February, and they were up 5.1% year over year versus the 5.7% annual gain seen in January. And we'll see how much of those wages are being eaten up by inflation next week when the CPI report is released on Thursday. Economists are forecasting the pace of inflation will be unchanged at a 40-year high of 7.5% year over year. Let me know your thoughts, though, in the comments. Do you think inflation got even worse last month? Be sure you don't miss the Wall Report next week to find out, and have a great weekend. Hit that subscribe button and the notifications bell before you go.